Today, we are diving into one heck of a day for the markets. We're talking about Thursday, March 5th, 2026. This was a day defined by a massive tug of war, with global conflict trying to drag everything down, and this powerful technological revolution pulling in the complete opposite direction.
So, how did this all shake out? I mean, you see headlines about military action, oil prices going through the roof. You'd expect to see a sea of red, right? But something else was happening. A really powerful counter-narrative was unfolding in the world of artificial intelligence. So, how did these two massive forces collide? And, well, which one actually came out on top?
All right, to get our heads around this, here's how we're going to break it down. We'll start with the global conflict. Then we'll see the political reaction in Washington. After that, we'll look at how Wall Street was trying to make sense of it all. And then we'll uncover that AI story, the silver lining. And finally, we'll look at what's coming up next.
Okay, first things first, let's set the stage. The story that absolutely dominated the day was this intensifying military conflict, which you can imagine sent some serious shockwaves through the global economy.
You know, the speed of how this all escalated was just breathtaking. First, the U.S. Navy sinks an Iranian warship. That is a major move. Iran immediately retaliates, striking an oil tanker. And just like that, the Strait of Hormuz, which is this critical choke point for about 20% of the world's oil, it was effectively shut down. All of a sudden, you have hundreds of ships just stranded, and a major artery of global trade is just choked off.
And the economic fallout? It was immediate and it was clear. West Texas Intermediate crude oil jumped more than 8% in a single day. Look, this wasn't just some small price change. This was a shock to the system. It brought all those fears of persistent, energy-driven inflation right back to the front of everyone's mind.
Now, let's shift gears and turn to Washington, because, as you'd expect, the events overseas triggered a swift and pretty decisive political reaction, both in Congress and from the administration.
So a huge test came in the U.S. Senate. They voted on a war powers resolution. This would have basically limited the president's authority to continue military action. But the resolution was rejected, 53 to 47. For the markets, this was a clear signal. It meant the conflict was probably not going to de-escalate anytime soon, and that the administration had solid political backing for its aggressive military stance.
And then there was this really fascinating twist right at the intersection of tech and national security. The Pentagon made a huge move. They designated the AI developer Anthropic as a supply chain risk. Now, why? Well, it happened after the company basically said no to letting its tech be used for certain military and surveillance stuff. It was a really clear message that the government was asserting control over critical AI development, which, just added another layer of complexity for the entire tech sector.
Okay, so with oil prices soaring and Washington basically on a war footing, how did Wall Street process all of this? The answer is a classic tug of war between fear and, well, fundamentals.
So if you just look at the closing numbers, yeah, it was clearly a risk-off day. The Dow Jones, which is full of those big industrial companies that are super sensitive to energy costs and supply chains, it took the biggest hit, down over 1.6%. But this is where it gets really interesting. Notice how the losses get smaller as you move to the S&P 500, and then even smaller for the tech-heavy NASDAQ. Something was holding that part of the market up.
And here's an even closer look at that division. This chart really tells the story. The energy sector, no surprise here, surged on higher oil prices. Industrials, they got hammered by those exact same fears. But then there's technology. It actually finished the day in the green. So here's the crucial point. While the old economy was reeling, the new economy was holding its ground. So why?
Well, the answer lies right here, in our fourth section. The AI silver lining. A single, powerful earnings report provided a counter-narrative so strong that it was able to fight back against that huge wave of geopolitical fear.
And the company at the center of it all was the semiconductor giant Broadcom. I mean, everyone was watching its earnings report, and it absolutely delivered. It provided this massive dose of optimism right when the market needed it most. So Broadcom beat what the analysts were expecting on both revenue and earnings per share. But the real story, the jaw-dropper, is that last line. AI revenue hit $8.4 billion. That's up 106% year over year. Just let that sink in for a second. The company more than doubled its AI revenue in a single year. That's a stunning testament to the sheer scale of this AI infrastructure build-out. And if the results weren't enough, the guidance from CEO Hock Tan was absolutely mind-blowing.
He said the company could see a path to generating over $100 billion in AI chip revenue alone in 2027. This wasn't just about a good quarter. This was a signal that the AI revolution is accelerating at an incredible pace. It was a fundamental story strong enough to stand up against even the scariest of headlines.
So, where does all this leave us? Let's zoom out for a second and look at the key tests that are facing the market in the immediate future.
Yeah, this tug of war is far from over. On Friday, the February jobs report is going to give us a fresh look at the health of the U.S. economy. Then, on Tuesday, another tech giant, Oracle, reports earnings, which will give us even more data on the AI spending cycle. And finally, Wednesday's CPI inflation data will be absolutely critical, especially with oil prices now on the move again.
And that really brings us to our final question. On one side, you have the forces of geopolitical conflict, supply shocks, and inflation. And on the other, you have this explosive technological growth, a fundamental shift in the economy being driven by AI. Both are incredibly powerful, and both are happening right now. The big question for the market, and really for all of us, is which one of these forces is going to define what comes next.